Hey, good afternoon, everybody. We're going to go over our Forex trades for today, Monday, June 22nd. For all you golf fans out there, hope you enjoyed the U.S. Open. It was really exciting. It was great. A little finish that was a little skeptic. Unfortunately, it felt terrible to see someone win by someone else losing rather than just someone winning by taking control. But that's what happens in the sport. Anyway, let's go over the trade. We had one trade. Which we picked up 2.6 pips on a size adjusted basis, 26.9 on a non-size adjusted basis. Actually, first let's talk about existing home sales. Was the big data number from this morning. Although existing home sales is only, I think, medium or maybe even a low level priority number. Came in at 5.35 million versus an estimate of 5.6. Excuse me, versus an estimate of 5.26 million. So it did beat forecast, was the highest number since 2009. All sounds great for existing home sales until you delve into it. Unfortunately, 67% of investors paid cash for the homes in the month of May, and the demand is clearly coming from foreign investors as the Chinese buyers have now surpassed Canadian snowbirds, or what we call Canadians coming down and buying warmer weather client homes from the Carolinas, Georgia, Florida, and whatnot. So 67% of investors, or I should say 67% of people buying homes in existing homes with cash. I have to say, unfortunately, that's not a good sign because that is not sustainable. Unless China keeps growing and we know their economy is contracting. So not the best of signs for housing, although the street has initially viewed it as a very positive sign. The markets did pop higher this morning, mainly because of the news from Greece. Greece has submitted a proposal. From what I'm hearing and reading, the hard deadline is the end of this month. That the IMF, the ECB, they're not going to bend anymore. They're not going to extend it. We shall see. It's been extended 3 times. But from what they're saying, at least they started to say over the weekend that this is it. Greece did submit a proposal today. We haven't received any. All we received so far is confirmation that they submitted a proposal. We really don't know exactly what's in it, and we don't know how the IMF and the ECB is taking it, especially Germany. How they're taking this proposal. Are they going to counter? Are they going to accept it? Or are they going to deny it? What's the story? So that could come at any day. It could come today. It could come tomorrow. It could come anytime between now and the end of the month. So we shall see. So let's get to the trades. We had one trade in New Zealand dollar, US dollar, which you see here. We were short this from towards the end of last week, 0.69043. Weren't a big fan of it because it did trade as low as 68.70 back earlier in the week of last week, but that was just a spike down. It did make another run down to 68.80. So we're shorting at 69.04. Not a big fan of it, but we had the signal. We had more. We actually had more buyers than sellers on the retail end, which we know from watching certain indicators, and that's a contrarian indicator. So we're going to take the flip side because most retail traders are wrong, or basically, I don't want to say wrong, or basically lose money. So the stats are there. So we took it as a contrarian indicator. We had our algorithm pointing down, although it's pointing down. But as you know, we don't like to short bottoms or near year bottoms. We don't like to buy near year tops. We rather see them bounce off the bottom or fall off from the top, come down a little or go up a little, depending on what it's doing, consolidate, and then make a move out of there. And preferably go with the long-term trend. We're going with the long-term trend in this trade. Unfortunately, we're so close to the year bottom. Came in the office this morning, saw it around 68.75. We ended up covering 68.774, picking up 26.9 pips, adjusted for size, 2.6 pips. That size is adjusted down because we had it for a couple of days, so we have interest in there. So instead of rounding up to 2.7, we rounded it down to 2.6. And you can see what it did after we got out. It traded as low as 68.70 right after us. tried to bounce up to the figure, just short of the figure of 0.69000, failed. Came all the way back down to this 0.6870 level. It's pretty much where we're at right now. So you had plenty of time to cover with a profit. This thing could break lower, but unfortunately, we're not going to be in it, and we don't want to be in it because we don't want to take that risk. You don't know when the news is coming from Euro and Greece. You don't exactly know how that's going to affect the New Zealand dollar or the U.S. dollar. Obviously, more so, it's going to have a greater impact on the euro. So if you're trading the euro, you have to be careful when that news does break. And what the euro does is really a crapshoot. So the way we look at it is, unless you're just going to scalp the euro for a matter of a few minutes or an hour or so, whatever, there's really no reason to be involved with the euro until this week or until the end of the month expires, or we get news of an agreement or a non-agreement. This week or before or by the end of the month. So we'll stay clear of the euro for sure. We may scalp it here and there just for quick trades. But again, those are, you're in them for a matter of a few minutes, an hour, maybe half an hour. So you're going to have your stop in. So unless you're just so unlucky that news breaks at that small period of time that you're in it for the next 8 days or whatever's left in June, you won't have to worry about as far as the scalping goes. So that's it. We're going to wrap it up. Like I said, one trade, size adjusted 2.6 pips. So that's it. If any signals come out, they'll be coming your way. If you're still trading now, good luck, and we'll be back tomorrow, assuming we get some action later this afternoon, tonight, and tomorrow morning. Have a great rest of your day.